For learning, you require a notebook with white papers, preferably a 200 long size notebook, pen, pencil, calculator, and sit in a proper posture and get ready if any important dictation was given, you must be in a position to record them. You must inculcate a practice of writing on your own, because if you write something out of the lecture, then your communication skills, writing skills will improve. The writing skills will not come automatically, it will come by practice. When a teacher teaches you an important matter, if there is some important substance in the matter, immediately you have to convert into writing. When I am coming to the some communication received from the students, sir, furniture sold, I already gave in your WhatsApp communication, I sent it. The owner sold his private property, that is furniture he sold, household furniture sold. He got 7,000 rupees personally, it is a personal money. That money he invested in the business. He brings that 7,000 rupees into the business. That money is not directly brought in cash into the business, but he directly deposited 7,000 rupees in the bank account. So, cash at bank in the books of the business, the bank account maintained by the business, 7,000 rupees bank balance increases because owner invested. So his capital also increases. The entry is bank account at R2 capital account. That is the one student asked a question and I replied also. Now, already I gave you the solution to almost all the problems, so except one or two worked out in the classroom. Still you have a doubt that I will clarify, please send me on your phone. 13th problem, there is a correction in 13th problem. If you have any doubt in 13th problem, I will spend about 5 to 10 minutes and then I will move to petty cash book. If you have any doubt, because the 13th problem includes cash book with GST. GST is a tax. When you purchase the goods, we pay tax. That is called input GST. Input GST. If it is paid to central government, it is called input CGST. Central government GST. If the tax is paid to state government, it is called input SGST. Input GST means it is the tax paid by the buyer to the seller at the time of purchasing the goods or at the time of receiving services like rent, stationery purchased, rent or any other services received. Goods and services tax. Goods service, good, not only goods, we also tax. Service also being taxed. Services also taxed under this act. So, in this context, input GST means this is a tax paid by the buyer at the time of purchasing or at the time of taking services. The next one is output GST. Output GST means this is the GST collected by the seller from buyer. When buyer pays, seller receives it.
Jan third transactions.
Whatever it may be, I'll explain to you. This is output GST means a tax collected by the seller when goods. He receives not only the value of the goods selling price plus GST is collected. Rates of GST will be given in the problem, don't worry, because the GST rates will change from time to time. Government will give a notification. So the GST rates are not never remain constant, they go on changing. But GST is shared by, in case of intrastate transactions. Intrastate means transactions that take place within the state. Within the state, they are called intrastate transactions, where GST is shared equally. GST is shared equally by state government and central government. If it is Telangana government, so 6% will go to Telangana government, another 6% will go to central government of India. So that is shared equally in case of intra-state transactions. In case of interstate transactions between two states, a transaction between two states, that is buyer and seller not in the same state, the buyer is or seller is in two different states. This is called interstate transaction. In that case, the GST is known as IGST, IGST, integrated GST. If it is paid, it is called input GST. If it is received, it is called output IGST. That's it. Now coming to the 13th problem, I clarify if any doubts are there. One student just raised the doubts are on 13th transaction. The transaction on 13th.
No, sir. Third Jan.
3rd January you want? Okay, okay. 3rd January, what is the value of the goods purchased? 30,000. GST is you have purchased the goods on credit from whose fellow? Mr. Bansal.
Sir.
Bansal. The entry రాసుకోండి notebook తీసుకొని entry రాసుకోండి. You take a notebook and write the entry, then you satisfy why it is so. I am referring to transaction January 3rd. When goods are purchased from Bansal, the entry is రాసుకోండి. Purchases account that are 30,000. Purchases account that are 30,000. Input CGST account that are 1,800. Input CGST account that are 1,800. Input SGST account that are 1,800. Input SGST account that are 1,800. There are three debits now. Purchases account that are 30,000. Input CGST account that are 1,800. Input SGST account that are also 1,800. To Bansal's account 33,600. 33,600. The transaction is over. This is purchase of goods on credit. It cannot be entered in the cash book. After some time, we have to pay to Bansal 33,600, but we paid to Bansal 33,000 only. How much payable to Bansal? 33,600 we have to pay to the Bansal for purchasing the goods. That includes GST also. Now we are paying that 33,600, but we settled his account with 33,000 only. Means we gain 600 rupees. When it is paid to Bansal, Raskon entry. Next entry is, first one is purchased goods on credit. Next entry is, we are paying the amount due. The entry is Bansal account that are, Raskon, Bansal account that are 33,600. Bansal account that are 33,600. to bank. It is paid from bank కాబట్టి bank రాయండి. Cash pay చేస్తే to cash రాయండి. Don't ask me. When the payment or receipt is concerned, bank or cash అంటే you have to be very careful. A check referred, then write bank. If it is nothing, check is not referred, write cash. A payment is made now. Paid to Bansal from bank. Entry is Bansal account at our 33,600 to bank account 33,000 to bank account 33,000. How much paid from bank? 33,000 is paid. Cash goes out as the giver. Bank gives that money. Credit the giver. So bank gives that 33,000 rupees to Mr. Bansal. Bank is the giver. Next one, to discount received account 600. To discount received account 600. So this is the entry. This is a cash transaction. The second one is a cash transaction. Hence you write in the cash book, payment side, by Bansal account, by Bansal's account, discount received column 600, bank column 33,000. Right? Bank column 33,000, payment side. Payment means credit side. So cash book, right hand side, that is payment side, by Bansal account, by Bansal's account, discount received column 600 and bank column it is 33,000. That is the transaction. That is on 3rd January. One student asked me, sir, about 13th dated. I will explain all, don't worry. Dated 13th. What is this 13th? 13th anarama, 14th? 13th. Paste. Which problem? Tell me, somebody asked me 13th or so.
9th problem, John 25th transaction.
Which problem? Now talking of 13th problem. I'm talking about 13th problem. After completion of 13th, I talk to you other than 13th. Now, if anybody has a doubt, be careful. The transaction 16th, yesterday also I told you, January 16th, 13th problem, January 16th transaction is bought goods including IGST 12%, 17,920. This is 17,920 includes tax. Cost of the goods plus tax. If cost of the goods are 100, IGST is 12%, 112. 112% is equal to 17,920. Then cost of purchases is equal to 100. So 17,920 into 100 by 112, you get 16,000. That is cost of purchases. Then GST is, IGST is 12% on 16,000 comes to 1,920. 1,920. So he gave combined collectively. Some problems, be careful. Some payments he gave including tax. Some items he did not include tax, excluding tax. Some are excluding tax, some are including tax. But you must be very careful when read that transaction. Is it the money paid includes tax or excludes tax? The money paid, whether it includes tax or excludes tax.
Includes tax.
Then you must be careful. You have to separate them. You have to separate. How much is towards purchases? How much is towards tax? Tax means here, intrastate, it is called CGST, SGST. In case of interstate, it is called IGST. IGST. If we pay, it is called input GST. If we receive, on sales we receive it, no? It is called output GST. That you have to write the appropriate wording. That's it. So this is problem number 13. Whether you read it carefully, understanding the problem, if you understand the problem correctly, half of the problem is done. Half of the problem is complete. So first thing is read up to the full stop. Read it thoroughly till the last word. Then understand it. Then when you study the problem, you see, always remember, you are the owner. You are recording the transactions for the business. You are an employee of the business. You are working for business. You are recording transactions pertaining to business. Whether you are a receiver, business is receiver or giver. Be careful. Not only that, the transactions, when you are recording, they must be recorded in chronological order. Chronological order means as per the date wise. The date wise as per the historical recording antam. We write January 1st or the 2nd, 3rd, 4th, 5th. You can't write 10th January, then later 2nd January you can't record. It must be recorded in chronological order. As per the time, it happens. That's it. And then when you always be careful, who is the owner? Always be careful. Who is the owner name also you must remember. Owner name. Sometimes Ramesh is the owner. Ramesh taken the goods for personal use. Sometimes Ramesh taken goods 10,000. Who is Ramesh? Then you must get it. He is not the outsider. He is the owner. Then drawings will come into picture. So therefore, you must remember who is the owner. Not only that, you have to remember the date, financial year also. For what period? Financial year also, you must keep in mind. Then closing, procedure of closing account also you must master it. That all will come not all of a sudden. By practice, day by day, if you go on writing, I told you, practice makes you perfect. Even ask Kohli today, come and bat. Next day, the England tour is beginning. If you ask Kohli to bat, and he first ball, he may be clean bowled. He's a very wonderful, he's a gifted batsman in the world. Even he was clean bowled for the first ball. Then what is the answer you can give for that? Because he knows it how to play it. He played all type of shots. But he did not negotiate that ball because he is not practicing at this moment. So therefore, conditioning camps are conducted. Their practicing sessions they have to attend. You also. Though you know it, you feel that, sir, I know everything, cash book, everything. I have mastered, I have already mastered it in intermediate. Then don't be overconfident. Be in your limits. Like Kohli, you may be simply you will unable to, we may not solve the problem correctly because you have lost the touch. You have lost the touch. If you lost the touch, it takes time to regain the touch. Therefore, don't overestimate yourself. Be obedient. వినయం అంటాం తెలుగులో. విజయస్సుకు వినయం ఉండాలి, నేర్చుకోవాలండి. నేను అందుకనే ఒక సెంటెన్స్ రాశాను, మీ పుస్తకం మంచిగా దగ్గర పెట్టుకోండి, కూర్చోండి, మంచిగా రాసుకోండి. అమ్మ నాన్న ప్రేమించండి, అమ్మ అన్నం పెడుతుంది, నాన్న డబ్బులు ఇచ్చినప్పుడు మీరు మంచిగా చదువుకోవాలి, అభివృద్ధి చెందాలి. అందుకనే ఏంటంటే కులములోన ఒకడు గుణవంతుడు ఉండిన కులము వెలయు వాని గుణము చేత అంటారు మహాకవి. కులములోన ఒకడు కులం అంటే ఇది క్యాస్ట్ అది కాదు. కులం అంటే ఒక కమ్యూనిటీలో ఒక మంచి విద్యార్థి వచ్చాడు అనుకోండి, వాడి వల్ల వాళ్ళ చుట్టాలకి వాళ్ళ ఉన్న పరిసరాల్లో అతనికి గొప్ప పేరు వస్తుంది, చాలా మంచి పేరు వస్తుంది. ఎందుకంటే అరే బాగా చదువుకున్నాడు రా, ఈజ్ ఏ వండర్ఫుల్ జెంటిల్మెన్, మంచి కుర్రోడు రా అంటారు. దానివల్ల వాళ్ళ కుటుంబానికి కూడా, కుటుంబమే కాదు వాళ్ళ ఆ సమాజానికి కూడా గుర్తింపు వస్తుంది. అందుకని ఈ ఫ్లేవర్ పోయింది మీకు అంతా. వాట్సాప్లో ఏం వచ్చిన తర్వాత యు ఆర్ నాట్ లెర్నింగ్ ఎగ్జాక్ట్లీ వాట్ ఈస్ మెంట్ బై ఎడ్యుకేషన్. ఎడ్యుకేషన్ ఈజ్ నాట్ దట్ జస్ట్ సెల్ ఫోన్, అవి కావు. క్యారెక్టర్ బిల్డింగ్, వివేకానంద చెప్పాడు, ఇది ఎడ్యుకేషన్ ఈజ్ క్యారెక్టర్ బిల్డింగ్. మానవత్వం ఉండాలి. Can you leave it aside? 13th problem, if you have any doubt, I will clarify. ఏమైనా ఉన్నాయారా?
Sir, 28. 28, sir.
28, okay. I'll come to 28. Deposited cash into bank, it is a contra. Deposited cash into bank, 25,000, it is a contra. Contra is bank column debit side, 25,000 record in bank column.
దాని కిందది సార్, దాని కిందది.
దాని కింద 28. Given check for cash purchases, IGST 12%. This is gave a check for cash purchases. So by purchases, it is included, it including IGST. 20,000 is your purchases is 20, by purchases 20,000, by input IGST 2,400. Input IGST together it is 22,400. 20,000 for goods purchased. 12% on 20,000 becomes 2,400. So 22,400 is paid from bank. Paid from check for cash purchases ante entante even you pay by online payment or cash purchase means is not necessary. You have to pay only currency notes. Cash purchase means it doesn't mean only currency notes to be handed over. No. Cash purchase means payment is made immediately without any delay. That is called cash purchases. Here cash purchases means payment made immediately. That of course he made through bank. Check annadu kada. When he says it is a check, we gave the check for purchases. So therefore it is not cash. Cash purchase antam. Kani we paid through bank. Paid through check annadu. So bank column 20,000 payment side. Then bank column 2,400 also bank column. Both are given. 22,400 paid. 20,000 towards purchases. Input IGST we have paid 2,400. Total paid from bank is 22,400 paid from bank. That's it. That is transaction 28. That's it. If it is inclusive, January 5th, received from Meenu a check for 19,600 against dues. Of course, here given on 5th it was received, on 8th it was deposited. 5th it is received, 8th it was deposited. 5th I am taking you. This is check comes in, take as cash comes in. On 5th debit side రాసుకునేవని to Meenu's account. 400 in the discount allowed column. 400 discount allowed. In cash column you write 19,600. Cash column. Check మనకు వచ్చింది కానీ it was not deposited in the bank on the same day. So therefore don't write in the bank column unless it is deposited in the bank. Unless the check is deposited in the bank, don't write in the bank column. So we are keeping it in cash column. That's it. We have done it earlier also. So cash column 19,600, bank column dash. When it was deposited in the bank, actually it was deposited on 8th January. Then you have to write is a contra. Then it is a contra. That is bank account debtor. అందుకే రాసుకోమన్నా పెన్ను పెన్సిల్ పట్టుకొని రెడీగా ఉండమని. When the check was deposited in the bank, the entry is bank account debtor to cash. Bank account debtor to cash. Bank column 19,600 is debited. Debit side 19,600 in the bank column to cash triangle. To cash bank column 19,600. Credit side cash goes out. So cash column 19,600 in cash column. By bank, you have to write by bank. Cash column 19,600. That is the it is a contra. C and write in a ledger folio column. Write the letter C means contra. Contra and it appears on other side also. It appears on both the sides is called contra. So it appears contra on the opposite side. Contrast. It is an opposite side. So that's it.
Sir, January 30.
January 30. Rent paid
Yes,
by paid by check. It plus included in the GST. GST included 6% for state government and central government 6% each. So it is 12,000 is your 12,000 is rent paid. Entry is rent paid is 12,000. CGST 720, SGST 720, total 13,440. 13,440. Towards
Sir?
rent, it is
Sir,
including.
how would we know that whether it is included or not?
He said, read the sentence. What is given? What is given?
Paid rent by check plus CGST and SGST at the rate 6% each.
He said, no, plus is there or not? Rent paid by check plus tax also. Plus tax also.
సార్ మరి Jan 3rd అప్పుడు మనం మళ్ళీ క్యాల్కులేట్ చేసాం కదా.
January 3rd ఏమన్నాడు? ప్లస్ అన్నాడా? ఏమన్నాడు? Purchased goods from so and so plus purchased goods from Mr. Bansal 30,000. Goods purchased is given, 30,000 is purchased. Cost of the goods 30,000 అన్నాడు. He said clearly, cost of the goods is 30,000 plus cost CGST and SGST at the rate of 6% each. That up to that credit purchase. Later unpaid and paid by check 33,000 in settlement of account. ఇక్కడ ప్లస్ అన్నాడు. కాస్ట్ ఆఫ్ ద గుడ్స్ గివెన్. ఇక్కడ కాస్ట్ ఆఫ్ ద గుడ్స్ గివెన్. GST is calculated on the cost of the goods.
Yes,
cost
sir.
of goods purchased is 30,000. On 30,000, 6% comes to 6% on 30 means 1,800. కొంచెం కేర్ఫుల్ గా ఉండండి, అంతే, ఏం లేదు. కాస్ట్ ఆఫ్ గూడ్స్ పర్చేజెస్ వాల్యూ గివెన్. ఆన్ పర్చేజ్డ్ వాల్యూ 6% is calculated. That's it. Now be careful that this type of problems may not be attempted in the university exam because simple cash book will be given. Because I am taking up the problems because you may get a doubt, sir. Later you may rise, sir, this problem is not worked out. So sometimes to understand certain problems, you require more information, more knowledge about accounting principles. That's it. So that is how always I warn you whenever I talk to you, be cautious. Whenever I am talking to you, if any important point is there, immediately write on your notebook. Whatever I am talking to you, it will be your question paper also. Maybe internal assessment, I will same questions. What I am talking to you, the same will be in the form of a question. Then you will be in a position to answer effectively. You can score all marks awarded. Not only this, in the university exam also. More particularly, you get the advantage, you feel the importance of my lecture. When you go for interviews in campus placements, when multinational companies will visit our college, they will ask certain questions. More particularly, the interview is mostly take place on accounting principles. First year accountancy will be that holds the key. Then ask you the fundamentals of accounting. Then somebody asks you whether the bank account is a real account or personal account. Drawings account is a real account or personal account. Capital account is a personal account or real account. Provision for bad debts is a real account, or he may ask some questions. What is a transaction? Then if you don't answer it, then is a total failure, is a disastrous for a commerce student, particularly accounting student. He don't know what is journal entry, what is a transaction, what are the rules of debit and credit, what are the types of accounts. If you do not know, then they understand you are not a serious student. They don't consider your candidature for the job you applied for. Simple ga namaste babu vellu antaru. Endukante you did not pay attention for the subject which you have studied in your BCom. If I give you job, your attitude is very clear. You did not learn the subject which is important for you. When you don't learn the subject, I don't trust you. You will serve my company efficiently. Simply they say, థ్యాంక్ యూ బాబా అంటారు, ఇంటికి పంపిస్తారు. అందుకనే మీరు జాగ్రత్తగా ఉండండి. Learn as much as you can. That's it. Now, next one is petty cash book. If you have any personal questions, you may send me on your WhatsApp. I will respond at leisurely when I feel free. Don't worry. And it is not the last class I am delivering. We take some classes after that. Question answer sessions. If I have any time, I communicate to you in advance. And that day, 1 or 2 hours at a stretch. You may ask any number of doubts on subject. I will explain. By the time for the doubt, till the doubt is clear, don't wait. You carry on the other problems. A doubt is there, keep it in pending. Write on a notebook and ask when I give you time. That's it. Now, coming to the petty cash book. Roscoe notes that petty cash book. Petty cash book. It is a separate cash book. It is a separate cash book, different from main cash book, different from main cash book. To record cash transactions to meet cash transactions to meet petty oblique small expenses. Petty oblique PETTY. Petty oblique small expenses which require payment immediately. Which require payment immediately. Full stop. The management will estimate the management will estimate the probable petty expenditure. Management will estimate the probable petty expenditure per month. Probable petty expenditure per month. And this money is provided to a person called petty cashier by the head cashier full stop. Every month on first of every month, right? On first day of every month, on first day of every month, head cashier gives The petty cashier gives to head cashier gives to petty cashier the predetermined amount. Predetermined amount. Example 1000 per month. Example Raskon. It will be great help for you to understand this. Example rupees 1000. Full stop. The petty cashier will use this 1000. The petty cashier uses this amount to meet the petty expenditure. To meet the petty expenditure for the month. Petty expenditure for the month. Example, Raskon. Example, expenditure for the month, total expenditure for the month is rupees 850. Raskon. Total expenditure for the month is rupees 850 rupees. Full stop. Petty cash balance is rupees 150. Petty cash balance is rupees 150. Full stop. Again, on the first of next month, full stop. Again, on first day of next month, head cashier gives to petty cashier. Head cashier gives to petty cashier rupees 850. That is the actual expenditure incurred by petty cashier. The actual expenditure incurred by petty cashier. So that, full stop. So that at the beginning of next month, the cash balance with petty cashier is rupees 1000. That is, Raskon, that is 150 rupees unspent amount 150 rupees, unspent amount 150 rupees plus 850 received from, plus rupees 850 received from head cashier. This system is known as, change the para. This system is known as impressed system. Impressed means IMPREST. Impressed. This system is known as impressed system. IMPREST. Impressed system. Full stop. Petty cash book is maintained under impressed system. Petty cash book is maintained under impressed system. Petty cash book is maintained under impressed system. I will explain why. Without wasting the money, head cashier, first month head cashier gives 1,000 rupees to the petty cashier. For example, for January month, management will estimate what could be the probable expenditure for the month of January. Suppose they decided 1,000 would be the expenditure. This 1,000 rupees head cashier gives to the petty cashier. He need not give cash. He may give the check to the petty cashier. Petty cashier will go to the bank, collect 1,000 rupees in smaller denomination. Whatever the denomination you want, he will collect the money 1,000 rupees, not in one note. He will collect in smaller denomination, 5 rupees some notes, 10 rupees some notes, 20 rupees some notes, 50 rupees some notes. So they will collect and keep readily available in the business premises, business office, in the office. So then he go on making payment. Small amounts like refreshment, sometimes to office cleaning. Suppose your detergents are required. So sometimes, office cleaning um, liquids are required. Even nowadays, now we are using sanitizers. So etc. We require immediate money. So he will pay from that 1,000 rupees. So at the end of the month, for example, total expenditure is 850 rupees. Example I gave. His expenditure is 180 or 850. Expenditure is 850. Out of 1,000, 850 is paid. How much cash balance on 31st January? It is 150 left. Cash balance is left with petty cash. Then next month, February 1st, he needs 1,000. Every month 1,000 is impressed. This 1,000 is called impressed. So again he need 1,000. Head cashier will not give you 1,000. If 1,000 is given, you already have 150. So head cashier gives only 850 to you. 850 to petty cashier. So 850 received from head cashier plus already 150 there in the office with you. So together it becomes 1,000. For example, February, the expenditure is 980. 980 is the expenditure of February. How much cash left out? 20 rupees left with the petty cashier. So head cashier will give another 980 again. 980 rupees head cashier will give you. So 980 received from head cashier plus 20 with you. Together it becomes 1,000. So it should not exceed 1,000 on any day. So that this is mostly we refer to the management, cash management. You don't keep cash idle. So therefore, head cashier will reimburse the expenditure incurred by petty cashier every month. So that on first of every month, the cash balance with petty cashier will be 1,000 only. In this case, I told you 1,000. If you say 2,000, 2,000 only. It should not be more than that. So that cash unnecessarily don't keep cash blocked here. Only keep the cash, money in cash form to the extent it is required, because we need money for many purposes. So therefore, don't waste the money, excess money here. So every money we borrowed, we have to pay interest on that. Business has to pay interest on money borrowed. So don't waste money. So under impressed system, cash books are maintained. Petty cash book is maintained under impressed system. Small businessmen may not maintain petty cash book. Small businessmen, they don't maintain. But big organizations like Infosys, various multinational companies, there may be impressed, maybe 5,000, 10,000, 20, 1 lakh కూడా ఉండొచ్చు impressed. ఎందుకంటే immediately have to pay. General manager comes by auto, or some car failed on the way, he will come by costly car. Then you have to pay 1,000, 2,000 rupees you have to pay for the hired car. So therefore, that depends upon the organization requirement. Big the organization, more money is required as petty cash. Small the organization, less amount is required. Now, question here is how a petty cash book is maintained, how the transactions relating to petty payments, how they are recorded in the petty cash book. That is all about petty cash book. Now, Raskon, petty cash book is maintained under any one of the following ways. Petty cash book may be maintained under any one of the following ways. Anyone? Under any one of the following ways. Under any one of the following ways. Number one, simple petty cash book. Simple petty cash book. Number two, analytical, ANALY, analytical, RORR, columnar, 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 columnar petty cash book. Analytical, ORR, columnar petty cash book. That's it. This you have to go through. I don't waste time here because you have to go a long way. A petty cash, simple petty cash book means it is a T shape. Receipt side only one receipt. 1,000 received. We received on the debit side. Petty cash debit side 1,000. Credit side all payments paid for stationery, paid for office cleaning, detergents purchased. All you write with a small amount. So then close it. Debit side 1,000. Credit side all expenses 850. By balance carried down 150. To balance brought down 150. Again 850 received on second month. So 850. Again it becomes 1,000 on the debit side. Again February expenditure. Again we close February. Balance carried down, balance brought down. Plus expenditure incurred will be reimbursed by the head cashier. Again it will become 1,000. It goes on. It is a simple cash book. There are no other. It's not a difficult to prepare. Next one is columnar cash book. I will explain an example given in the problem so that I can save time here instead of wasting much time on this. And we'll move to the next petty cash book somewhere. Page number illustration. I will explain. 48 lo unnara. Cash book only original entry multi cash book. Simple petty cash book 15, page number 15. Page number 15, second unit 1-15. Second unit 1-15. 15, 16. చూడండి ఇక్కడ 16th page simple petty cash book ను చూడండి అక్కడ simple cash book. Okay, page number 16 it is given. Page number 16. So, debit side amount received from simple petty cash book. Amount received 1,000. Dated 2019. Pro forma koncham teda untundi. Cash folio number. The folio number.
The amount received.
Received 1,000. Particulars of expenditure on the right hand side. Voucher number. Voucher ante whenever you pay auto bill unte auto pay chesav anukondi. He will give a receipt. A receipt pay number rasto reading toti voucher number 1, 2, 3 అని వేస్తాం. vouchers అవన్నీ కట్టగట్టి హెడ్ క్యాషియర్ చూపించాలా. పే చేసావా నిజంగానే అంటే ఆటో వాళ్ళ సిగ్నేచర్ టేకెన్ దట్ పేపర్ నెంబర్ ఇస్తాం 1, 2, 3, 4, 5 అని ఒకటి. ఎవరి voucher బేర్స్ ఏ నెంబర్ మనమే రాస్తాం చేతితో రెడింగ్ తోటి. voucher నెంబర్ 1 ఫస్ట్ ఇచ్చింది voucher 1, 2, 3, 4 రాస్తాం. So paid for postage 50 rupees paid, stationery 80 rupees paid, like that. Telegram, cartage, tipping charges, binders account, books binding చేసి ఉండొచ్చు, auto charges, కూలీ, paper clips, electric charges. So then how much out of 1000? 720 spent, 280 balance. 280 rupees is balance left. Out of 1000 received, 720 is spent, 280 is the balance left. So balance carried down, brought down. Balance brought down, left side వస్తుంది చూడు. Balance brought down, February 1st, it is 280. 280. Again we collect from head cashier. Again we receive 720, he will pay. So 280 amount unspent plus 720 head cashier will give on the 1st of February 1st. So it becomes once again 1000. Credit side once again it goes on. That is called.
So what is cash folio?
Cash folio under is a number, page number. Cash folio.
If nothing is left with
tell me.
Sir, here
Nothing is-
both particulars are same, sir, for common to debit and credit side.
Debit side, credit side. Debit side is 1000, amount received is debited, and payment is last column, payments. Particulars of
No, sir,
payment.
particulars are common to this debit side and credit side of this simple petty cash book, sir.
No. Cash folio, right? There is no receipts now, only one receipt.
Yes, sir,
Unlike
but
cash,
in first transaction.
I will tell you, only you receive only one time. How many times you receive money? Only one time on first day. That's it. There is no subsequent receipts. Only one time 1000 received. You memorize this pro forma and follow it. That's it. 1000 received. Total payments are 720. 280 left out. Out of 1000, 720 total payments. 280 is closing balance. That is brought down, carried down. Don't carried down. It will come brought down, will come on the left hand side, extreme left hand side. Extreme left hand side, 280 is balance brought down. In particulars, payments, receipts both are in the same particulars column. చూడండి ఇక్కడ ఫస్ట్ ఐటమ్ చూడండి particulars లో to bank. How much received? 1000. It is on extreme left hand side ఉంది చూడండి, extreme left hand side. To bank. Only one time we receive. To bank, don't write on the right hand side. Right hand side, last column is payment side. So left hand side, last column is receipt side. Received 1000 to bank. All payments we come by and on. Debit side always will come to TO2. Credit side we always write by. So by means all payments. 2 means received. Received 1000 on January 1st. Date. On what date it is received? 1000 received from bank on 1st January 2019. 1st January we received from bank 1000. That 1000 is recorded on the left, extreme left hand side. 1000. Later payments by postage. By and is all payments. So you keep on writing all expenses according to dates, and a date unta a date. On what day you have paid? In January, the date wise you write by postage, telegrams, electricity charges, detergents, by detergents, whatever you pay. So at the end of the month we close it. So receipts column, payments column is to be total. Receipt side only one receipt, 1000. So that 1000 horizontally you write on both the sides. And the difference is balance left, that is balance carried down last day of the month, that will be carried to next month. 2 balance brought down, that will come on the debit side. కొంచెం ప్రొసీజరల్ గా కొంచెం తేడా ఉంటుంది. డెబిట్ సైడ్ 280 is balance brought down. 280 నార్మల్ గా ఏంటంటే we write on the కాలం ఉంటుంది, డెబిట్ క్రెడిట్ ఉంటుంది. ఇక్కడ is a procedure normally maintained as cash book is maintained in this format. Simple cash book is maintained in this format. Receipt only one time. Payments can be any number of times. record date wise. The balance carried to next month. Again, actual expenditure will be reimbursed by the head cashier. So, in monthly entry, January expenditure is 720. That 720 rupees will be paid to petty cashier by head cashier. Already you have 280 rupees balance with you. 720 rupees head cashier will give. On February 1st, again, you will have a balance of 1000 rupees. Again, February payments. Whatever balance left in February, carried to the March 1st to balance brought down. Carried down, brought down. So, remaining amount again, actual expenditure incurred by petty cashier will be paid by head cashier, so that the amount with petty cashier will be same every month. That is called impressed. That is called impressed. ఇంకోటి చూడండి, ఎలక్ట్రికల్ పెట్టి క్యాష్ బుక్ ఉంది. ఎలక్ట్రికల్ పెట్టి క్యాష్ బుక్, దిస్ ఈస్ ఆల్సో సిమిలర్, ఐడెంటికల్. Debit side, credit side, it is there. Debit side and credit side. Cash received, date, particulars, voucher number. VR number means voucher number, total amount paid. The columns are there. Stationery printing, one column. Cartage, one column. Conveyance, one column. Postage and telegrams, one column. Sundry expenses, one column. Okay, 8 columns may be created. Example ఒక లెక్క చూపిస్తాను ఉన్నాడు. పేజ్ నెంబర్ సేమ్, పేజ్ నెంబర్ 19 లో ఉంది చూడండి. 19, పేజ్ నెంబర్ 19, వర్క్అవుట్ దిస్ ప్రాబ్లం. పేజ్ నెంబర్ 19, ఇలస్ట్రేషన్ నెంబర్ 8. ఇలస్ట్రేషన్ నెంబర్ 8, పేజ్ నెంబర్ 19, పేజ్ నెంబర్ 19, ఇలస్ట్రేషన్ నెంబర్ 8. ఇలస్ట్రేషన్ నెంబర్ 8 చూడండి. పెట్టి క్యాష్ బుక్ ఇస్ అనలిటికల్ పెట్టి క్యాష్ బుక్ గివెన్ హియర్. Analytical petty cash book given here. The example is the illustration number 7. He gave illustration 7. Illustration 7 is explained here. Now look at the particulars column. How much money received on June 1st? 1000 is received. 2019 June 1st. How much cash received? 1000. That is recorded on the left, extreme left side. Then first payment is on June 2nd. Postage paid 80 rupees. Postage, by postage 80 rupees in the total column. You create one column for postage. Write the amount in postage column. Second one, fifth one, 5th June. Stationery paid 50 rupees. Paid for stationery 50. That 50 rupees is recorded stationery column. Look at stationery column is 1, 2, 3, 4, 5. 6th column is stationery. There is no rule. You can have any number of columns. Every expenditure we extend one more column. Some expenses may be repeated. Some expenses may be repeated. So this is called columnar cash book. Columnar means for every expenditure, one column is extended. How many columns should be there? There is no limit. Normally, 6, 7 columns, maximum 8 columns will be there in any problem. If you can't create further columns on the right side, you write others. Right, last column row, others are sundries and rasesi. You close the length of the problem. So here what happened? The postage, how many times happened? Student, postage 5th happened 80 rupees. It is also happened on 27th. Post and telegrams, it happened on 30th also. So next one is registered notice, postage, registered notice to landlord. That is coming here. You work it out, this problem. I don't want to spend time here because we have to run through this illustration workout. The proforma, you memorize the proforma. Important and it's not like other accounts. You have to memorize proforma. Practice this problem. Problem number, illustration number 7 ikkada. 7 solution is given. You practice it. Problem number 7. That is illustration. Page number 19. Draw the lines as usual. ఇక్కడ చూడండి ప్రొఫార్మా చూసి కాపీ చేయండి. Copy and work out this problem at home. And if still you have a doubt, I will come back after some time, not now. Because we have very important books are to be covered. Purchase book, sales book, journal proper. These three books are very vital for you. Along with cash book, we have to study in detail the transactions relating to purchase of goods, a major function of business, buying the goods, how they are to be recorded in the books, purchase of goods, how a businessman purchasing the goods are recorded in the books of accounts. Similarly, how a businessman records the transactions relating to sale of goods. These are the two major functions of business, including cash also a major function. These three books are very vital in subsidiary books. Others also we will go through, but when compared to the 8 books, cash book, purchase book, sales book, journal proper, these 4 books are vital. They must be understood properly. So that next class I will take up the book called purchases book. What is purchase book or purchase journal? So subsidiary books are 8. I told you already a long earlier class, in the introductory class. The total transactions of business are categorized into 8 groups. One is purchase function. Another is sales function. All purchase of goods will be recorded in purchase book, sales recorded in another book, cash transactions recorded in another book, then purchase returns, a separate book, sales returns, a separate book, and bills receivable, bills received from customers, a separate book, a bills accepted by us in favor of our suppliers, it is another book, and there are 7 books now. The last book is a book where transactions cannot be entered in any one of the 7 books. It will be recorded in the last book, that is 8th book, that is the last residuary book under. Some call it the residuary book, or called general journal or journal proper. This is vital for us. So 4 books are vital in this subsidiary books: cash book, purchase book, sales book, and journal proper. These problems may be framed for 12 marks or 50 essay questions may come on this. Cash book, purchase book, sales book, and journal proper. So bills receivable, bills payable is there. Purchase returns, sales returns. Though we maintain relatively these first 4 books are relatively important. In the next class, I will take up how purchase of goods recorded in purchases book. Purchase book and purchase journal both are same. Purchase book also called purchase journal. What is a journal? It is a book of original entry. A book of original entry or prime entry. All purchases are recorded in purchase book for the first time. So it is called journal. In the purchase book, we record only purchase of goods on credit only. Purchase of goods on credit only be recorded. There are 2 conditions. What is the first condition? It must be goods. What are goods? Goods means it is a merchandise purchased by the business in order to sell them. We buy the goods. Why? What intention? Why intention is to sell them. So they are called goods. If a cement dealer is there, goods purchased means cement purchased. Goods sold means cement sold. If it is a car dealer, Varun Motors, in Hyderabad we see Varun Motors, Mitra agencies. Varun Motors, he is a dealer in cars. He purchases the cars, sells the cars. Purchased goods means, for Varun Motor, purchased goods means cars purchased. Sold goods means cars sold because he is a trader in cars. He is a trader dealing in buying and selling of cars. Suppose a cement dealer purchases a car for office use. For him, car purchase is a asset. The car is not for sale. Car is not for sale. That is used in the business that we call asset, a real account. That we call the asset comes in and we call car account at our account. If the same car is purchased by Mitra agencies, we write purchases account at our entered. What for him it is purchases. For a cement dealer purchasing a car is an asset. Okay, that distinction must be maintained. You must understand. Now, cash purchases recorded in cash book. Be careful. Cash purchases recorded in cash book because cash is involved. Cash is involved. If goods are purchased on credit, that is to be recorded in purchase book. Purchase are two types. Purchase of goods, two types. Cash purchases recorded in cash book. Goods purchased for cash recorded in cash book. Goods purchased on credit, you can't write in the cash book. It is to be recorded in purchases book. That I will take up in the next class. So until then, see you, goodbye. We'll meet tomorrow. Okay, send absentees list without waiting till evening. After the classes are over, please send your absentees list, all the class in charges. Okay, we'll see you in the next.
Thank you, sir.
Thank you, sir.
Thank you, sir.
Thank you, sir.
Hello, sir. Good morning.
Good morning, sir. सर कहाँ है? अभी 15 मिनट हो गए.
పైన పెట్టేసి ఇక్కడ కొన్ని పైన ఇక్కడ బోర్డు మళ్ళీ కొంచెం అంత ఎట్లా కొద్దిగా తగ్గించి ఓకే రైట్ బోర్డు కావాలి బోర్డు పూర్తి కనపడి
Right, sir. Good morning, sir.
వెరీ గుడ్ మార్నింగ్ టు యూ
Good morning, sir.
యా వెరీ గుడ్ మార్నింగ్ సో లెట్ us continue the same lesson today also, that is the cost analysis.
Sir, unmute yourself,
Sir, unmute yourself.
Unmute yourself.
Okay, right. So first we have seen the meaning of the cost, and we have seen the cost function, and we have seen the types of costs also. Various types of costs are there. Each type of cost is to be used in a particular context. So like that we have seen different types of costs also. So today what we will do, we will try to understand the cost in the short run period. The last one in the yesterday's class, I mentioned about short run cost and long run cost also. So today we are going into detail about the cost in the short run period. Okay, so this is a possible for an essay question also. And what we want to understand in this is how the costs are going to change in the short run period as a result of change in the output. As a result of change in the output. So first of all, let us try to recollect the meaning of the short run period. The short run period is that period of time in which at least one factor of production will remain fixed or constant. That is, the producer may not have the sufficient time to change that factor also. So that period of time is a short run period. Let us take an example that a producer may change the labor by increasing the number of workers or by increasing the number of shifts also. He can increase the labor, but he cannot increase the capital represented by building or machinery, etc. He cannot increase in the short run period. The time is not sufficient to him. So with the help of the variable factor, a producer in the short run period can able to increase the production. Of course, there is a limit, but he can able to increase the production according to the demand in the market. So when the output is increased with one variable factor in the short run period, how the cost is going to change, that we understand in the short run cost. Whether the cost will increase at an increasing rate or at a decreasing rate, or it will remain constant, or it will decrease, or it will increase. So the change in the cost as a response to change in the output in the short run period is known as the behavior of the cost. The behavior of the cost in the short run period. Okay, the total change in a particular cost is called its behavior. So we would like to understand the behavior of the cost in the short run period as a result of change in the level of output. Okay. Now, let us try to see how we can able to classify the short run cost. The short run cost can be divided into two components. One is the fixed cost. Other one is the variable cost. Fixed cost, variable cost, two types. If you add fixed cost plus variable cost, you will get the total cost. Fixed cost plus variable cost is the total cost. So like that you can find three types of cost in short term period, or it is a classification. Fixed cost, variable cost, combination of these two is the total cost. Okay. So let us see what is the meaning of the fixed cost, or what costs are fixed. We can mention a statement about fixed cost like this. Fixed costs are those costs which cannot change with the change in the level of output. Once again, I will read it out. Fixed costs are those costs which cannot change, neither will increase nor will decrease. Fixed. Those costs which will remain constant or which will remain fixed with changes in the level of output. That is, output may increase or output may decrease, but this cost will not change. That is fixed cost. We can take some examples of the fixed cost also in a form which will not change with the change in the output. Take example that the salaries paid to the management. Salaries paid to the management will not change with the change in the amount of output in a particular period. They are fixed. Salaries are fixed. Even though no production in a particular month, but salary is to be paid. So it is a fixed. Similarly, interest on the capital borrowed is to be paid irrespective of the amount of output. In a particular month, output may be zero, but the firm has to pay interest compulsory. If the output increases also, he has to pay the same amount of interest. So interest amount paid on the capital is also fixed. Like salaries, interest is also the fixed one. Similarly, the rent on the building, which is hired from outside, the rent on the building is also the fixed one. This amount of rent will not change with the change in the amount of output. And the depreciation also you can take about the depreciation of fixed assets, like a building and a machinery. The depreciation also, the amount of the depreciation will not change with the amount of the output. Suppose if you take the 10% depreciation on fixed assets, you will calculate 10% depreciation for that year or for that month. It cannot increase from 10 to 12%, 10 to 8%, etc. It is a fixed also. So depreciation is a fixed one. And you can take about the license fees to be paid, the property tax on the building of the factory, the property tax, which is paid to the government, also will not change with the amount of the output. So these are the costs which are not having the direct relation with the amount of output. They will be fixed only, whether amount of production is there or not, or whether it is increasing or decreasing. So without changes in the output, these are going to be incurred. They are called as a fixed cost. Then we can take about the second one, that is a variable cost. It is a simple to state variable cost now. Variable costs are those costs which will change with the change in the level of output, directly related. If the output is zero, this cost is also zero. No production, no variable cost. If the production increases, variable cost also will increase. If the production decreases, variable cost will decrease. So the variable costs are those costs which will change with the changes in the level of output. They are called variable costs. We can also take some examples of the variable costs, like wages paid to the labor. The labor is directly related to the production. If they work for more number of hours, we have to pay them more. If the number of workers are increased, we have to pay more wages. If there is no production, there is no need to employ any labor at all. So more is the production, more number of workers, more hours of work, therefore amount of wages to be paid to them. So wages are changing when there is a change in the production. Similarly, raw material cost also. Raw material. If there is no production, no purchasing of raw material or no use of raw material, cost of raw material will be zero. If the production increases, we have to purchase the raw material and use it, so raw material cost will be there. If the production still increases, the amount of raw material will increase and cost of raw material also will increase. So the cost of raw material is also called as the variable cost. And you can also take another example, power. That electricity or power or whatever the source of energy, that power which is having a direct relation with the production. And it's not used in the offices for lighting purpose or this fans or etc. That is right, directly used in the production and maybe connected with the machines or etc. So that power is also variable cost. If there is no production, machines may not be used, consumption of electricity also will be zero. Power is also zero. If they produce some output, they use the power to run the machinery and power expenditure is there. If they are producing more and more, continuous use of the power will be there, amount of the power expenses will increase. So the expenditure on the power is also the variable. So we can take like this, wages are the variable cost, power is a variable cost, the raw material is also variable cost. These are the few examples of the variable cost.
Excuse me, sir.
Yeah.
Sir,
Sir.
fixed asset is there, no, sir?
Yeah, right.
That is fixed cost asset means depreciation and insurance paid by that are fixed costs.
Yes, exactly. Even insurance also is fixed.
And
Right, right.
when this fixed asset is operated by a person,
Hmm.
that person is paid some salary or wage cost.
Wage.
Okay, wage. Then
Wage.
that is fixed cost or variable cost?
That is variable because the wages are paid to the labor who are directly involved in the production. Whereas the salary is paid to the employees who are working in the offices. So salaries are fixed to the management. Whereas the wages which are paid to the labor who are working in the factory on site, they are variable.
Sir, he is operating a fixed asset, so he'll get a fixed cost, no, sir?
No. Labor cost is different and machine cost is different.
No, sir, he is operating a fixed cost, so when the machine is not for work, he'll not get the work, no, sir?
No, understand. If the machines are different and workers are different here. The machine is representing the capital, right? If there is no production, machine is not at all used.
Yes, sir.
So, okay, and whether it is used also, no problem. But amount of the depreciation on the fixed cost of machinery will be there. It is calculated per period, 10%, 20% depreciation on the machinery, whether used or not. So the depreciation representing the capital asset like a machinery, etc., is the fixed one. But wages which are paid to the workers is a variable. So we had to separate that capital represented by machinery, etc., from the labor. Okay?
Sir, insurance or depreciation is paid by per month, no, sir?
Yeah, it's to be paid by the firm, irrespective of the amount of the production.
Sir, then the same person is also working for the fixed asset. Well, when that phase is not called fixed cost.
No. The insurance paid by the firm to protect the company assets, not for a labor. Insurance is to protect the company and machinery, that is to be paid irrespective of anything occurring in the, irrespective of any production in the company. for a period, for 1 year, suppose if you take a policy of 10,000 rupees, you must pay 10,000 rupees. You cannot say there is no production, I can't pay the premium. You have to pay the premium. But for worker, if the production is there, you employ one worker, you pay the wage. If the production is more, you will employ two workers, you will pay more wages. If there is no production, no worker at all. So the workers or the labor, the cost of the labor or the wages is called as a variable. Okay. So let us have this opinion about the fixed cost and variable cost, and the combination of these two or addition of these two will result in the total cost of the production. So we can write a simple equation now.
Notes regarding this.
Yeah, about this only. So the total cost is equal total cost of the production is equal fixed cost plus variable cost So we got now three types of cost. One is the total cost, second one is the fixed cost, third one is called as a variable cost. This fixed cost is also known as a total fixed cost, total, representing TFC. Variable cost is also called as a total variable cost, TVC, total variable cost. Total cost is represented by TC, total cost. So total cost TC is equal to total fixed cost TFC plus total variable cost TVC. So this is a simple equation to understand about the total cost and its component fixed cost and variable cost also. Okay, let us try to understand how they will change with the change in the amount of output. With the change in the amount of output, variable cost will
Notes
change.
regarding this.
Yeah, about these three, their behavior, how they will change when the production changes. If the production increases, how the variable cost will increase, how the total cost will increase. So that we would like to see with the help of the diagram, right? So you can have a graph or a diagram representing these three.
You said notes today regarding this.
Pardon?
Will you send notes today regarding
Yeah,
this
right. It is
in the
there.
group?
Yeah, after this lesson only I will put in the WhatsApp. Immediately. It is there
Okay,
with me.
sir.
Okay,
After
sir,
this
thank
class,
you.
immediately I will put it. I will put it.
Okay, sir.
It's like this. Cost on the y-axis in terms of rupees, whereas quantity of output on x-axis. This is the quantity output on x-axis representing the quantity, whereas the cost on the y-axis representing the money value or the money in terms of rupees. Okay. The total fixed cost is same, constant, irrespective of the production. Suppose if you say total fixed cost is some 10,000 rupees, like this, whether the production is zero, fixed cost is there, 10,000 rupees to be spent. If the production is 100 units, the same amount of fixed cost will be there. If the production increases to 200 also, the same amount of the fixed cost will be there. So the fixed cost is the same, that's why it will become a horizontal line, like this. The fixed cost curve is like a horizontal line. We can call this is a TFC curve. TFC, that is a total fixed cost curve. This total fixed cost curve is fixed. It is a constant, irrespective of the level of production. So it is a horizontal line like this. Even if the production is zero, the total fixed cost is there. Suppose you take the salaries paid to the top level management, whether production is there or not in that particular period, the amount of salaries to pay. So even at the level of zero production, fixed cost is there. So it starts from somewhere else on the y-axis here. And this is a horizontal line or parallel to x-axis. Parallel to x-axis. So this is the curve called total fixed cost curve. Okay. Then second one we can take about the variable cost curve also. If the production is zero, variable cost is also zero. No wage to be paid to any worker. No power is used. No raw material used. So when the production is zero, variable cost is also zero. Therefore, it will start from somewhere else here. The variable cost curve will start from this zero, from the origin. If the output increases, the variable cost also will increase. Increasing, and also it will be increasing. So it will start from here and it will be increasing. The total variable cost will increase like this. It will increase. It will be increasing like this. Like this also you can draw. A curve starting from zero, rising up from left to right, is the variable cost. You can call it as TVC curve. Total variable cost curve. So these are the two curves representing the behavior of the total fixed cost and total variable cost. Fixed cost curve is horizontal, parallel to x-axis. Variable cost curve is starting right from zero and rising up from left to right. This curve may be a straight line. It may be a straight line like this. Or it may be like this. The shape of this variable cost curve will depend upon the rate of change in it. So in some textbooks you can find a straight line going up from zero. In some textbooks you can find like a curve like this also. So both are correct only. But it must rise from left to right, starting from zero. Whereas a fixed cost curve is starting from somewhere else on the y-axis, representing that fixed amount. This is a fixed cost. This is the amount. Therefore, it's starting from somewhere else here. Okay. Now we got these two curves. And we can also draw third one, total cost curve also. Total cost curve, that is the fixed cost plus variable cost. That is the total cost. So where from it will start? It will start from the point of starting of fixed cost. When the production is zero, total cost is also equal to fixed cost. Suppose you take an example. Fixed cost is 100 rupees plus variable cost is zero because the production is zero and the total cost is also equal to 100. When the production is zero, total cost and fixed cost is the same. Therefore, the total cost curve will start from this point, that is from the beginning of fixed cost curve. Okay? And it will be rising. It will be rising like a total variable cost curve. Total cost curve also will rise up from left to right. So like this. Like this. Total cost curve. Okay, so we got these three cost curves. Total fixed cost curve, horizontal one. Total variable cost curve is rising up from left to right. Total cost curve also will rise from left to right. Okay. Now when you draw the total variable cost curve and total cost curve, you should see that the distance between the TVC and the TC, the distance between these two is equal. These two are equidistant curves. Suppose if I remove this fixed cost curve. If I remove this, the distance between these two is equal everywhere. They are equal. So PVC curve and total cost curve are equidistant curves. We can also call them parallel curves. Parallel. Because the distance is represented by fixed cost. This distance is represented by fixed cost. Fixed cost is same, that's why the distance is also same. So total variable cost curve and the total cost curve are parallel to each other. Okay? Suppose if you remove the fixed cost curve completely like this. Okay? If you remove that TFC curve, you draw only these two curves. Let us to find out what is the fixed cost component, variable cost component, and the total cost at a particular level of output. Imagine if the total output is this much. This is a T0 or O0 or O0 or T0 something. If the output level is this, at this output level, what is the fixed cost? What is the variable cost? What is the total cost? That we wanted to find. What we have to do is we extend from this point a line, a vertical line like this with the help of a scale, and it will become tangent with the total variable cost curve at a point A, and further extend it, it will become tangent with the total cost curve at a point B. So you got now a vertical line like this. A vertical line you got like this. This is, suppose if you say this is a X, this point is X, X, A, B. This is the vertical line. In this X, A, B, X to A, from here to here, this is the variable cost. From here to here is a variable cost. Then from here to here, that is from A to B, is a fixed cost. So from here to this curve, the distance is representing variable cost. From point A to the point B is representing the fixed cost. So you got these two components. Fixed cost component you got here, variable cost component also you got. So without a fixed cost curve also, you can able to get the total cost containing the two components again. So this is amount of the cost which we can able to get with the help of these two curves also. Okay. We'll come back to the original three curves. Okay. TFC curve. Right. So this is the diagram representing the behavior of total cost. The behavior of the total cost. That is the total fixed cost, total variable cost, and the total cost. Three are represented by this diagram. Okay. Then let us see the further their averages. We can calculate average of each one of these three. Average of these three costs we can able to calculate. Suppose if you divide the total cost by amount of output. Divide the total cost by the amount of output. You will get average total cost or total average cost. If you divide the total fixed cost by amount of output, you will get average fixed cost. If you divide the total variable cost by quantity of output, you will get the total average variable cost. Like that, we can able to calculate averages of these three. So we will write down these three costs also. three more costs. One, AFC, average fixed cost, which is equal to total fixed cost divided by amount of output, that is a Q. Average fixed cost can be calculated by dividing the total fixed cost with the amount of output, that is a Q. Similarly, average variable cost can be calculated by dividing the total variable cost with the level of output, TVC by Q. Then average total cost, ATC, or you can also call it TC, total cost, simply is equal to total cost divided by amount of output. So like this, we can also find out the averages of these three also. One is average fixed cost, AFC. Second one is average variable cost. The third one is average total cost, ATC also we can get. So total we got now 3 total cost, 3 average cost, 6. Plus one more, that is a marginal cost also. Marginal, one more is there, that is a marginal cost in the short run period. You also know about the meaning of the marginal. Is addition.
Extra satisfaction from extra unit.
That is regarding utility. You are correct, exactly saying. Satisfaction is representing the utility there. So when you say extra utility, that is representing marginal utility. But here we have to say extra output or extra cost here. Since we are dealing with the cost, we have to say extra cost. The additional cost or extra cost incurred to produce one more unit. Or only one unit extra.
Sir, repeat again. Your video and voice was struck. Only marginal cost.
Yeah. The marginal cost is the additional cost or extra cost incurred to produce one more unit. That's all. Or we can also say marginal cost is the addition to the existing total cost. Caused by production of one more unit. That is the marginal cost. Okay. We can write 2 equations for this marginal cost also. 2 equations are there for calculating the marginal cost. I will write it on the board. The marginal cost equation. Marginal cost, that is the MC, equal to total cost of TC, the total cost of n units. The present level of output, let us say 100. The total cost of 100 units. Total cost of n units. Okay? N, let us assume it is equal to 100. So total cost of n units minus total cost of n minus 1 units. Total cost of n minus 1 units. When n is 100, n minus 1 is equal to 99 units. So this is the equation to calculate marginal cost. So marginal cost equal to total cost of n units minus total cost of n minus 1 units. This is one. There is also another equation for calculating marginal cost also. Second one is that marginal cost is equal to delta TC. Delta TC, that is a change in the total cost. Change in the total cost divided by delta Q. That is the change in the amount of marginal cost is equal delta TC minus delta Q. Sorry, divided by delta Q. So these are the two equations which are useful for calculating the marginal cost. So like this, we got now 7 types of costs in the short run period. 7. One is the total cost. Second, total fixed cost. Total variable cost. 3. Then 3 averages. That is average fixed cost, average variable cost, average total cost. So 3 averages, 3 total. 6 plus 1. That is the marginal cost. So all these 7 costs are there in the short run period, and we can see their behavior. We can see their behavior in the short run period. Of course, we had taken the 3 already, and we will take another remaining 4. How these remaining 4 will change when the level of output changes. So that we have to see with the graphs and the schedule also. If you take the schedule, cost schedule, we can understand more clearly. So we will take the cost schedule as well as the graph or diagram. Both will help us to understand their behavior and interrelationship between them also. Their individual behaviors and the relationship among them also or between them also is possible with the help of the schedule and the graph. Okay. So these 7, about these 7 or 7, the schedule representing all these 7, we can take in the next class, and we can also take the graph in the next class, and we will understand clearly tomorrow.
Sir,
Yeah.
sir, is there any graphical representation for marginal cost, sir?
There is there. The marginal cost is also to be drawn. Marginal cost curve is also there. So 4 are there, no? Average fixed cost curve, average variable cost curve, average total cost curve, and marginal cost curve. 4 curves are there, and these 4 curves can be drawn in one diagram. In one diagram representing the interrelationship also. You can draw separately if there is any need, but when you explain about the types, about the cost in the short run period, then you will draw all these 4 together. We can have interrelationship among them also. We clearly observe when the variable cost curve will reach the minimum, when when variable cost curve will reach the minimum. Like that, we can understand about the minimum levels of each one, and when they are rising, when they are falling, etc. That we can see with the help of the cost schedule and the graphs also.
Sir,
Okay.
this total 7 are cost analysis in short run period, sir.
Exactly. Exactly. In the short run period. In the short run period. When it comes to long run period, we may not discuss all the 7. There we will discuss only the averages. In the long run period, we will discuss with the help of average cost curves instead of all these 7. Okay? Any more doubts?
Yes, sir.
Any more? Now, just I will put it in the WhatsApp group. Now, immediately I will put it in the WhatsApp group, and you can get this. Even for tomorrow's lesson also, that is there, schedule is there, and a graph is also there for even for tomorrow. Any more doubts or any more explanations required? All are okay?
Sir, explain sunk cost.
Sunk cost. Okay, sunk means it is the past tense of the sink. Some expenditure which is a sink in the assets is called as a sunk cost. All the sunk costs are historical costs. The historical means the cost which has spent already, the expenses are already incurred in the past period. In the fixed assets, are called as a sunk cost. Take for example, a building you have purchased in the previous period. You purchased a building, right? Okay. You purchased a building that is there. So when you have purchased this building in the past for some 10 lakh rupees or something, some 10 lakh rupees you have purchased. So 10 lakh rupees is the expenditure you incurred in the past that is now in the form of the building for you. So 10 lakh rupees which you have spent in the past is called as a sunk cost. Is called as the sunk cost. Now, why we take this concept of sunk cost? To understand whether this expenditure on the building, the past expenditure on the building is useful to decision making or not useful for the decision making. So, what we say that sunk cost is not useful for a decision making. How it is? Take example. You got a building in it, right? In this building, what you wanted to do is not relevant to the amount of expenditure in the past. The building is there, the space is there. Whether you wanted to use it for manufacturing or whether you want to use it for running the classes or for an institution, or you can use it for office purpose. So whatever the purpose, for whatever the purpose you can make use this building is not related to the 10 lakh rupees expenditure in the past. You have done it, that's all. The building is there. You do not think about the 10 lakh rupees cost now. You either you can go for office use, or you can go for running the institution, or you can go for what is called as the manufacturing. So these decisions can be taken without consideration of this 10 lakh rupees past cost in the building. So they are called as a sunk costs. Okay?
Yes, sir. Thank you.
Right. Okay, I will see you in the next class.
Thank you,
Bye,
sir.
sir.
Thank you, sir.
Thank you, sir.